What is up, people? Miles here to Keep the Change, and today we are talking about a hot growth stock that I just looked into recently. Really excited about it. It's in the sports gambling industry and it's going public soon through a SPAC. And no, it's not DraftKings or GAN, okay? We've talked about those on the channel before, but it's out with the old and in with the new, baby. You know what it do. The company we're talking about today is actually Genius Sports, and this is the most excited I've been about a stock in a very long time. So if you guys appreciate that, go ahead and leave me a like, means a lot. And if you want to see more content from me, I upload every Tuesday and every Friday, mainly stock videos, personal finance stuff, so make sure to subscribe. Now, I've touched on online gambling a ton on this channel. It's nothing new, but if you don't know, I'm going to catch you up to speed. Basically, back in 2018, the US repealed a law that made sports gambling illegal. And all that really means is that sports gambling is federally legal as of 2018, and now it's just up to the states to decide whether or not they want to legalize it. Now, 11 states have actually made online sports gambling legal, and a projected 37 states are going to by 2023. And the entire sports betting industry is worth billions and is growing at a massive rate as more states are legalizing it, more opportunities open up, more growth avenues. So obviously there's a lot of key players here, okay? You got DraftKings, FanDuel, a bunch of other ones. So you may be saying to yourself, there's so many sports betting stocks already, why should I care about this one? And that is a fantastic question, my dear student. You get an A on your report card, congrats. And the reason you should care is that this business model is actually drastically different. See, what they do is provide the data from sports games to the sports betting apps and companies. So every time there's a shot or maybe an assist or someone blocks something or there's a touchdown or a goal or whatever the case may be, Genius Sports is there to keep track of that data and record it and report it. And then they actually give the data to sports betting apps so they can figure out who won, who lost, yada yada, all that good stuff. And in return, Genius Sports gets 10% of the revenue from these apps that they're providing the data for. In fact, this company is so big and so good at what they do that they're actually the #1 sports data rights owner, which is absolutely crazy. And they covered over 240,000 events as of this year. They also specialize in live streaming these sports games as well, and 74% of their revenue comes from giving data and live streams to these apps. If you look at their client base, you're going to see some extremely recognizable names, mainly DraftKings, FanDuel, SkyBet, and so many more. So basically, they're in the business of trying to sell to businesses instead of trying to get a consumer to use their app. And I love this business model. It reminds me of that old saying, like in a gold rush, you should go and sell shovels. Sports betting is a little similar to a new gold rush almost. There's a bunch of apps, right? And they're fighting. They're going to fight to the death. They're going to duke it out, try and get this gold, the consumer. And in the meantime, Genius Sports is going to be over here selling them shovels with data for what they need to get the gold. So all these sports betting apps have a lot of competition. However, for Genius Sports, there's actually very little competition in this space, and they only have one other main competitor, which is Sports Radar. Just taking a look at the graph of the number of events that Genius Sports is actually covering, you can see that it's growing year in and year out, and there's no sign of slowing. They also have a bunch of recognizable names, okay? The NBA, NCAA football, American hockey team, and a ton more. Some in Europe, some in other places, a lot. Now, looking at the income statement, the revenue growth, they went from 42 million 5 years ago to 145 million now, and that's a growth rate of over 250%. What's even more amazing to me personally is the fact that they were able to grow revenues in 2020. I mean, the pandemic, so many sporting events have been canceled, sports have been canceled in general all over the world because of this thing, and they were still able to grow their revenues massively. So just imagine once this whole pandemic is behind us and it just feels like a bad dream. I mean, this company is going to go crazy in terms of revenue growth. Taking a deeper look at the revenue breakdown, we can see that 60% of the revenue is reoccurring. So that's really good. That's money that's coming year in, year out, practically guaranteed. And their top 10 customers only take up 30% of their total revenue. So that means they're not too reliant on just one customer. That's a pretty good sign. Now, taking a look at the profits, they have this whole claim that, they're on a path to profitability, guys. Profits are coming, but I'm a little skeptical of that myself. From what I've seen and read about the industry, sports gambling is not that profitable in comparison to online casino gaming. However, this is a different type of business model. Maybe I have to give it credit where credit's due. But just taking a look at this chart, so obviously they're bragging. They're basically like, hey guys, our EBITDA numbers are going to go up. And if you don't know what EBITDA is, it's basically like a Fugazi net income, okay? It's not really profits. Your EBITDA is basically your profit before a bunch of expenses that actually matter to the company. So like, I don't really count it as a good profit measurement, but a lot of, high revenue growth companies with no profits will look at that and they'll say, guys, we're almost going to be profitable. Don't worry. We'll just have to see how that goes, I guess. But to be fair to them, pretty much no other sports gambling stock I've seen has been profitable yet. So, I mean, that's kind of fair in a way. And I mean, if we're being honest, nobody's going to buy this stock because the profits, right? The profitability. People are going to buy the stock for the revenue growth, the top line. That's what's going to matter here. Overall, though, this stock has a great business model, really unique, amazing revenue growth, double digits at least, at the very least. And then on top of that, it's in an emerging billion-dollar market. Where do we sign up for this, right? I mean, I want to get a piece of it. Well, that's where things kind of get a little tricky. See, they're going public through a SPAC, and these SPACs have been real popular lately, specifically this year. I am not the biggest fan of them. However, in this situation, I do understand it. I see it a little differently. If you don't know what a SPAC is, then you're probably doing a lot better in life than I am and have more friends than me, so congrats. But basically, all a SPAC is a company that goes onto the stock market and their whole purpose is to just buy out a private company. And SPAC's actually an acronym for Special Purpose Acquisition Companies, so their whole purpose is to acquire another company. So the SPAC, called DMYD Technology, is actually going to buy Genius Sports because at the moment they're a private company. You can't invest in them directly. So this company is going to become public through this whole SPAC merger situation, and you can actually buy the SPAC right now. I think the ticker symbol is DMYD. The reason Genius Sports is doing a SPAC instead of an IPO in order to get onto the market is so they can focus on the day-to-day stuff and not have to really focus on the whole IPO cost and everything associated with that. That's a whole headache that they don't want to deal with. They'll have DMYD Technology deal with all that nonsense. Well, they just run the business, and that's really awesome. On top of that, they're going to be on the public market and have a ton of access to new cash. I mean, this company's going to have $150 million in cash and no debt after this deal. The actual deal itself is going through in Q1 of 2021, so in the next couple months here, and it's valued at $1.5 billion. But that leaves us with the question, should you buy DMYD stock right here at $11? And I personally think the answer is yes. Of course, you should do your own research, but based off what I've seen, I think it's a buy. Because really, when you buy this, you're buying Genius Sports, and if we look at the valuation, it's actually really compelling in comparison to its competitors. You're paying a price to sales ratio of 7.4, which is actually extremely low compared to the rest of its sectors, along with the lowest EBITDA multiples as well in comparison to others in the same sector, with higher revenue growth as well. But in fairness, this has the worst profit margins out of any of these companies by a long shot, so keep that in mind. But from everything that I've seen so far from this company, I think they could be a legitimate player in the sports gambling industry, so I had to pick up some shares for myself. Okay, it's around 2% of my portfolio right now, so I didn't want to risk too much money, but I do think there's some reward here, hence why I bought the shares. Of course, make sure to do your own research, guys, okay? Don't buy a stock just because I'm buying it. Make sure to do your own due diligence. I've had some people hitting me up recently. They're like, hey, should I buy this stock? Should I buy that stock? And I appreciate people thinking I'm some sort of stock wizard or something, but at the end of the day, I'm just a guy who likes stocks and who likes YouTube, and I can't tell you what to buy or what to invest in because at the end of the day, these are all so unpredictable. Don't get it twisted though, I will happily talk about stocks with you guys anytime. I'm just trying to make sure you don't blindly follow me into a stock and do your own independent thinking, have your own opinions for yourself. So make sure to do your own research. Only invest amounts of money you feel comfortable with into stocks you know inside and out, and hopefully it'll be a good time for you. So thank you so much for watching. I appreciate you, means the world, and I love you.